Hi guys, welcome to the Con Club. Today we will be charting the markets. We'll be taking a look in particular at the technical analysis for the cotton market, and there are a number of factors to consider when looking at any market in particular. The first being trend lines, the second being channels, the third being moving averages, the fourth being Fibonacci retracement levels, and the fifth being momentum indicators. We'll be going through each one step by step in an easy and quick to use tutorial on how to get a snapshot of the technical picture for a given market. Okay, so step one is to identify the trend lines. We're using the daily chart here, so daily candlesticks. And what we want to do is get a snapshot view on what the market has done. We've taken this calendar year and we want to see if the moves are correlating to the upside or the downside. As you can see here, we can clearly see it's a strong move to the upside, and we've drawn the trend line to coincide with this. In order for any trend line to be confirmed, there needs to be a minimum of 3 reference points in contact with the lines that you've drawn. We're identifying here using the ovals the points of reference. The more reference points, the better. The better correlated your trend line will be. So once you're happy with your initial trend line, what we'll do next is look to create a trend channel. Now we do this by duplicating the initial trend line, and the idea now is to use this parallel line to formulate the channel for this move to the upside. Now the key here when using the parallel line is to try and capture as many points or candlesticks within the trend channel as possible. The more reference points you have, the stronger the correlation, and the more you will see the market respecting the channel that you have formulated. The next step is to identify areas of support and resistance. These are key entry and exit levels for traders looking to get in and out of the market. And the first method we use is the moving averages. Now we use the major moving averages, which include the 50-day, 100-day and 200-day moving averages. Of course, traders can vary this, but these are quite typically the analyst's preference when looking at any market. And what you can see from this study of the moving averages, identifying areas of support or resistance to the market. So once you've got your moving averages laid down, the next step is to identify areas of support and resistance. We do this using the Fibonacci retracement tool, going from the recent low to the recent high. And what you can see here is this quite clearly identifies these areas of resistance, which we can see here from the first oval drawn at 23.6, and the areas of support down at the 76.4% retracement. And again, we identify another key area of resistance being the 38.2% retracement, which is actually known amongst technical analysts as the golden ratio. The Fibonacci is a really useful tool to quickly identifying those levels, and we'd strongly recommend it as a key part of your analysis. Another really useful tool that we can use is the relative strength index. This allows us to identify overbought or oversold conditions within the market. Anything above 70 will indicate overbought, and anything below 30 would be oversold, and this would be a good buying opportunity. You can see here we're identifying these areas on the RSI line chart, and if you can see, it correlates clearly with the candlestick chart, which is directly above. Another useful tool also is then, once you've identified those areas, you can use horizontal lines to identify further lines of support stroke resistance to the market as potential areas for you to add to a position, or conversely exit a position if it's meeting an area of resistance. That just about wraps us up for today on the charting of the markets. We will be adding to our tips and tutorials as we progress. In the meantime, please feel free to like, comment and share this post, and join us at www.thecalmclub.com. Look forward to seeing you guys on our next webinar.